What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money, investing in fractional real estate online, as usual. It's Friday, so I'm going to do my weekly installment of the 52-week challenge. If you're unfamiliar with what that is, you can always click on the 52-week challenge playlist. That's part of my channel. But basically, I'm just, I've committed to buying at least one token, one fraction, one piece of real estate every week for the next year. It's something that several of us have talked about doing, some of us in the Discord, some people just messaging me directly, a couple people through X and other places. But just to try to overcome the analysis paralysis that I think a lot of people have. I know a lot of people that have signed up for these sites, some of them several months ago, and haven't pulled the trigger on anything yet. I think that it's one of the biggest issues I see a lot of, would-be investors have, is that they don't actually buy something. Now, I'm all for doing your due diligence. That's what my channel is all about. You should be doing your own due diligence on every platform that I talk about and on every property that you see me buy. Just because I buy something doesn't mean that you should. I'm sure we have vastly different risk profiles, different, makes up a different portion of my net worth than yours, all those sorts of things. That being said, I do have links to all the places that I'm currently invested on in the video description for this video. There's also a link to the Discord where several of us talk about fractional real estate investing just about every day, some different topic, a lot of different platforms, and whatnot. So, and there is a playlist for the 52-week challenge. So if you want to watch the first one, where I go into a little bit more detail about what we're trying to do, that should pop up at the end of this video. We'll see. I'm still learning how to make the YouTube work right, but I think that I have these little things popping up at the end now. You can tell me if that's not the case. But so, okay. I didn't have a very busy buying week this week. I think I bought pieces of 7 notes on ground floor. 1, 2, 3, 4, 5, 6, 7. Right now, I'm just letting loans roll over, and I'm just reinvesting those funds. So far, I've had, I think, closed projects. 46 loans pay off. I have 124 outstanding. My average return so far on ones that have been paid off is the blended rate between these two, so somewhere a little bit over 11%. Better than I expected so far, but I feel like it's been a fantastic risk-adjusted return. I don't know if I'm just getting lucky. Not really sure. One of the things that I am going to start to do at some point in the future, so it's been, I want to see how this goes. Building a portfolio over time and seeing how the money builds up. But I think it would also be interesting to just see how quickly I could liquidate a portfolio like this and get, say, 50% of my cash back. Now, because I keep getting payoffs, and I've had, about a quarter of the loans I've had pay off so far. 40-something out of 160, 170. Yeah, that seems about right. So I don't know. I think that I might try to experiment with that sometime in the future. Not really a whole lot to do with ground floor, right? I mean, it's been stuff pays off. I buy new notes, and that's the whole story with it. I bought a couple of properties on Lofty. Both of these, I think, are going to be ones that you've seen me buy before. This is 7014 Raymond Ave in St. Louis, Missouri. This is the one that I had proposed that we switch managers to a new manager, and that happened, I don't know, a month or two ago. They have a new tenant in place. They did recently tell us we probably need to get a new AC system. So that's not great, but this is one that I don't love the market. I do think the manager we picked is going to be a good one. But I'm buying this one almost entirely based on the huge discount to what I believe the real world value of this is. I think that when I look at all the sites trying to get a real price for it, I believe if we sold this, we'd net somewhere north of $40 per token. And my average purchase price has been around $18 and change per token before fees. So like around $20 per token for fees. So, if this one does end up vacant at some point in the near future and we have to sell it, there is some debt. It has like a $8,000 loan, but there's a decent return on investment to be made there. And if that doesn't happen and we just end up over time getting it back to where it's just paying out the rental yield based on the price I've paid will be fantastic. So, I'm pretty optimistic about that one. But again, do your own due diligence. Because it is a market where it's tough to keep a property rented. And the next one is this, 5003 Deneen Drive. This is a Memphis, Tennessee property. Again, I've just been buying it when it's very cheap. My average basis is, I think, a couple bucks below this. I think it's in the $16 or $17 range. It has a tenant in place. There is a big capital call balance that we're in the process of paying off. It's not a great market, but I believe I'm getting this at such a huge discount to the real world price of it, that even if it takes a couple years for it to get going, the combination of discount plus yield should end up being really good. So pretty, I don't have a ton of this one, a little bit more of this one. Um, but it's they're properties that I just keep picking up pieces of when they're cheap. And until such a time where like those tokens get to a price where I think they don't make sense, or if they start to pop a little bit, I will sell some. And we've seen, I've done that quite a few times now. In general, I think that the dominant strategy on Lofty is to buy discounted tokens, sell the property in the real world, uh, closer to the actual value, and to get that arbitrage, and that creates, really good short-term returns, which annualized creates fantastic returns. But plenty of times now I've bought tokens and properties that the token price just went up enough, that it made sense to just sell out. That's been most of the Sangamon that I bought, I've already sold. Um, that's the one that comes to mind because I've done it the most often because that one fluctuates a lot. But there's several others that I've both bought and sold. Oglesby was like that. I made a really nice return on that. Um, there's been a few, and so I'll just keep doing that. It is, as a real estate investor, it feels very weird to be more of an active trader. I feel like the profits that I'm making here are more in line with like flipping properties, or maybe even being a wholesaler, right? Holding the properties for very short periods of time. But one of the things that I've just always, I haven't always believed it, but one of the things that I've learned over my investing career is you really just have to take what the market gives you, right? Like you can't just sit around and wait for, you can't just devise a strategy, say, okay, this is what I'm going to do, and then wait for those deals to just materialize. You have to look at what's happening in the market, figure out where the opportunities are. And for me, I believe on Lofty, the discounted tokens are where there is more potential than anywhere else. And so far, it's where I've made much better returns than anywhere else on the site. Um, I have traditionally been a very long-term hold type of investor. Over time, I started to realize, like, okay, shorter hold periods start to create larger returns. But I've never been a flipper or a wholesaler. Like that hasn't been my main model ever. But you know, it's easy to do here. It's very very low work, to get what have turned out to be fantastic returns so far. So I don't know. I'm gonna just keep, that's gonna continue to be my strategy on Lofty, until I start to see some. There are a couple that I've bought that I think will be longer term holds because I like the market, I like the yield, and I got it at a discount. But there's very few that I just think, let me just pay par value for that and collect yield for a long time. And then so the last one I bought is a piece of this pad split on Mogul. It's the Chelsea. Uh, this is one I did a couple of videos in the Mogul playlist. So if you haven't seen this one, you can check that playlist out. I go through basically every property that has come up on their site since I started investing on there. Um, they do have their analysis tab up. This wasn't up the other day when I did the first video on it. You can see they've already sold out 161,000 of this. They're raising a total of, I think, 223. So, they're just blazing through these properties now. This one has a very strong in-place yield, so I understand why people are picking it up. My original concern about it, about the square footage discrepancy, they addressed that in the webinar that they did earlier this week. So I couldn't see a good reason not to buy this. I bought a little piece because they just keep putting them out. So um, I think I speak very positively about Mogul. I really like the deals that they're presenting, but you have to remember, I've only been on, an investor of theirs since I think December is when I picked up a piece of the Axelrod, which is the first one I bought with them. I've been happy with the performance for that one. I've been happy with everything that they've done. I mean, they've just really been good about answering questions, being as transparent as you want them to be. They're even making adjustments to the site to make it more so some of the ongoing performance more obvious. But just because I have all these nice things to say doesn't mean you should just be throwing a bunch of money on this site. It is a new platform. There's definitely platform risk, right? It's just like I mentioned this a lot of times, but people were excited about Landa when Landa first came out. Some relatively smart people that I know were excited about Landa, and that turned into a giant mess. So I think they have a lot of things going for them that Landa didn't, and the main one being the two guys that started Mogul are actual real estate guys, and seem to know what they're doing as far as picking properties go. But there's all sorts of different things that can go wrong, right? And so it's why, as much as I like them and speak positively of them, please don't take that to mean you should YOLO your whole net worth into any of their properties. So, just keep in mind this. I'm not trying to tell you what to do with your money. You want to do your own due diligence, and I know I say that all the time. And despite the fact that I say that all the time, I still have people messaging me all the time saying, "So which one of these should I buy?" Um, and that's not the goal, right? The reason I'm doing this channel, I'm trying to share a lot of my real estate investing experience, let you know the things that I think about when I do my due diligence. But I'm sure there's always things that I'm missing, and there's more things that you could look at. But it's also I'm trying to just develop this community where a lot of us talk about what we're buying, what our strategies are, just sort of sharing ideas, all of us getting better because of it. So just like I asked in the beginning, feel free to jump in to the Discord and talk about any of the stuff that you're buying. That link is in the description of this video. Please tickle the like button or poke it. Any way you want to make that thing happen. It's been fun to see my channel's actually been growing faster than I expected. I mean, I know this is a niche industry. Really just looking for a few friends to talk to about this, and it's been fantastic. I'm picking up a few friends to talk to about it almost every day, or at least one, or usually about one and a half, and so that's way more than I thought. A lot of you are joining the Discord. A lot of you are messaging me privately, having tons of great conversations and learning a lot about the technical aspects of some of these sites, which is where I really some of them are built on top of crypto. Sometimes so I'm learning about that from a lot of you. But just lots of different things. Some different markets. Some of you live in some of the markets that I'm buying in. I know I talked to a couple people that live in Atlanta, so that's kind of interesting to get that sort of local knowledge. And that's what I think that the benefit is to all of us, right? To just be a little bit involved and communicate with each other and talk strategy and all of that. I think I've said that probably 3 times in a row, so I'm going to be done with that. Keep the video relatively short, although I'm never capable of doing a 10-minute video, which you wouldn't believe that was actually the goal when I started doing these videos, was just put out 10 minutes every day. My average is closer to 30, so please watch it on 2x speed if I know I talk too slow for a lot of people, and that seems to work. That's actually when I listen back to it, what I listen to it at. I haven't figured out how to set it so that it just automatically plays like that for people, but if you know how to do that, let me know. And also, this is the end of the video, so there should be a link somewhere on the screen to a playlist for the 52-week challenge. If you don't see that, let me know. There should also be some other suggested video if I have figured that out right. But so far, I'm not positive I have. That's going to be it. Until next time, I'm going to keep making mistakes so that you don't have to.